Good afternoon, everyone. I hope you all have enjoyed your lunch. This is Serene Sarkar once again, of course, your host for the day. And I'll be hosting the entire session tomorrow also as well. And in the evening, of course, the cultural program. Before we proceed, I would like to introduce and invite the speakers, the chairman, and of course the moderator, along with the panelists. First and foremost, I would like to invite on stage the keynote speaker of this particular technical session, Dr. Norm Miller, Hahn Chair, Real Estate Finance, University of San Diego. Please join me welcoming Dr. Miller, please. Now I would like to invite the chairman of the session, the CEO, founder, Valocity, Ms. Carmen, please. Please join me welcoming Ms. Carmen. I would like to invite on stage the moderator, Mr. Sachin Gulati, Senior Director and Head Valuation, Jones Lang Ellis Saleh, India Limited. The panelists that we have for the panel discussion, Mr. Ritesh Kavdia, Executive Director, IBBI. Mr. Vijay Anand, Head Solutions Engineering Group, eValo. Mr. Vamshi KK, Executive Director and Head of Valuation and Advisory Services, Indian Southeast Asia, CBRE South Asia Private Limited. And Mr. Pankaj Kapoor, Founder and Managing Director, Liazes Forest. Of course, we would like to start our session, the technical session 2, which is called the Transforming Valuation Through Technology. That's the name of the session, with our keynote speaker, Dr. Norm Miller, to deliver his address on keynote. Thank you.
Thank you. If you could load the PowerPoint, please. Are you ready? We have the slides and the deck. So we're going to make this introductory comparison of AVMs and appraisals pretty brief. It's meant to inform those of you that are less familiar with AVMs, and then we're going to have a discussion with this panel. One of the reasons why AVMs have become so prominent in residential appraisal is because of criticisms of traditional appraisal. And the criticisms that we hear are appraisers lag the market, appraisers hit the mark and provide little information for lenders when they're pressured by loan officers, another criticism. Appraisers guess at adjustments for comparables. Appraisers guessed at time adjustments. Appraisers use very few comparables while AVMs use many. And appraisals do not report the uncertainty behind the value. So these are the typical criticisms that we hear in those that are comparing AVMs to appraisal. This is the result of several thousands or millions of appraisals that a colleague of mine ran. He's from the University of Cincinnati. When appraisers were told the price of a residential home, this is the distribution compared to the contract price. And what you should notice is that most of the distribution is to the right. In fact, it's typically 95% or more that hit the price or above it. And the problem is that when appraisers saw a home buyer overpaying, if they would come up with a low price for that home and the loan doesn't go through, the loan officer doesn't call them next time that they need a valuation. So this is the systemic problem that we have. Now, when appraisers were not told the price on the same set of properties, this is the distribution that we get. This is kind of what you would expect normally, 40 to 50% on each side. Isn't that interesting? This is when they're told the price. This is when they're not. That's one of the reasons why AVMs have started to become more relied upon, because they don't care what number they hit. And unfortunately, the appraisers are caught in a bit of a loan officer pressure cycle. And the ones that came in too low found they have less business. This is the deviation that we get from appraisals to sale price when they're not told the price. And this is the deviation we get for AVMs. And what you see is that they're fairly similar in residential. And this is back in 2011, and today the AVMs are actually better than they used to be. And when we compare AVMs to appraisals to see which are within 10% of the subsequent selling price, they're fairly similar, but the AVMs tend to be just a little bit better. The criticisms, on the other hand, of the AVMs: the computer-driven models do not inspect the subject property. Computer-driven models omit unique influences. AVMs tend to have fatter tails in terms of errors. And here's the reality today. You can combine AVMs with inspections to be sure that property condition is normal or as reported. So I see the world moving towards this hybrid model. Age is correlated with property condition, and we can talk more about problems and how to get around some of these problems in our panel. But property condition is something that you might develop information indirectly on. Data mining is important, and appraisers don't inspect comparable property. So there's advantages and disadvantages to both, but in the United States at least, AVMs have pretty much taken over the residential market, and the appraisers that want to stay in business are learning how to use them, do more work, and their volume is expanding. And in the commercial world, that's a long ways off. So I think what I'll do is I will fly through this. This was an example of how you can pick the neighborhood that you select comps from, and we can do it interactively. And this is a little description on sources of data: public records, brokers, past appraisals, other appraisers, property inspections, shared data, Google Earth, and I think our panel might touch upon this for India. And I think what I'll do is I'll skip through the rest so we can get through the panel. But here's my conclusions to start us off. Data sharing is critical. Reliable government data is helpful. Automation allows massive data analysis quickly and better. It's the world we're headed towards, not only in residential, but someday in commercial. And ideally, we'll be combining experience of appraisers, valuers, with the data analysis of an AVM. And I will stop there because I don't want to spend any more time, because I might be touching upon some of the comments of the experts that we have here. So thank you for allowing me the overview, and I'll turn it over to the chair.
Thank you very much, Dr. Miller. Now I would like to invite to the podium the lady of cause, and I'm sure we all have been looking forward to listen to her. She is the chairman of the session. She is the CEO and founder of Valocity. Please join me welcoming Ms. Carmen, please.
Good afternoon. Thank you. Exciting to be here at your summit, and it is very global. It's been amazing actually seeing how far everybody's come from throughout India and also indeed the world. Can I have my slides up actually, please? Thank you. I'll just wait for the slides. So I guess there's been a lot of talk around valuations, and particularly the reason you do valuations is valuations for loan. And so we're going to talk about technology, and awesome to hear the opening speaker this morning around paradigm shifts, because I want to touch on, before I get into technology for valuations, some of the big paradigm shifts that we're actually seeing globally around the world. Whoops, my clicker's not working. Oh, here we go. And I guess some of these shifts, if we look in the audience right now, all of you have got your mobile phones, all of the way we live our lives has evolved and is changing rapidly, even outside of valuations. And, you know, we have more and more data, and certainly our previous speaker is talking about data in the US. We have increased connectivity. All of us are on WhatsApp. We're all connected. There's increased cloud storage, and cloud means we can actually save data and use data. Customer expectations are increasing, and that's important to recognize because most of the valuations you're doing are for banks, for lenders, and they are having to serve those customers. And we're in the middle of an amazing technology revolution where everything that was never before possible is now possible. We can all sit here and connect to each other on our phones instantly. So I guess one of the biggest drivers is we're living in the age of the customer. That actually the bank is driven by his customer needs. He's competing with the bank down the road, and nobody's comparing them to each other. They're comparing them to global brands that are making our lives easier. Brands like Uber, Apple, Amazon, all of these brands deliver seamless and relevant experiences, and they're only possible with technology and data. And we heard earlier today that the businesses that haven't evolved with technology and data, such as Enron, Kodak, and there's many, many examples, haven't survived. And so it's important to recognize that the world is changing rapidly around us, and it's not just in the valuation space, it's in every single industry, across every single vertical, and it's happening whether we like it or not, and it's been driven by technology. So what's happening in valuation space? Well, a few big global trends that are happening are increased complexity. So there's more and more lenders, and we also heard earlier, that are expecting valuers to do more and more, and there's increased complexity with lending. They have to do anti-money laundering, they have to do a whole ton of things that they never had to do before. There's increased focus on measurement and on accuracy because banks have got higher and more compliance with the global financial crisis that caused an entire shift around the world that was driven by wrong collateral risk management. So there's a lot of visibility on what they're doing. And then there's this continuous need for speed of customer expectations. So customers are expecting things faster and easier and more seamless, but at the same time, there's more things that lenders have to do. And we have the evolution of technology and data that's supporting these frictions and actually trying to solve the friction of increased complexity and the need for increased speed and seamless expectation from a customer. So, it's important to understand the changing demands that lenders are under because collateral risk management has never been so important, and almost all the banks that we work with, particularly in the Australasian area, all of them are drowning in compliance. They have to show responsibility, they have to show best practice, they have to show responsible lending for what they're doing, and that feeds through to valuations and how the bank uses valuations and what they expect from valuations and the technology that's going to be used to drive it. So globally, what we see is very much, and we just saw the previous speaker talk about when the valuer knows what the sale price is, how does the valuer respond versus automated valuation models? And that's where we've seen increased use of platforms. And the platform connects the bank to the valuer, but actually doesn't let the valuer see the asking price, and so it helps them tick that box. So they're still using valuers, but able to do that and remove any potential collusion, and that makes them very happy, and the regulator has actually mandated that. So the banks have to do that. The customer can't just come into the bank with a valuation, and the lender can't choose their valuer. And then there's a whole suite of valuation products, and we're going to touch on some of them today. So there are automated valuation models, but there are desktops where valuers are sitting at a desk filling out pre-populated data and still using their IP and their local expertise to finish the valuation. And we still use full valuations vastly in those markets. So even though we've got good data and we can run automated valuation models, we can run desk valuations, there's still the increased use of full valuations, and it's really a cascade of the right valuation at the right time. When we look at India, you are very much in a paradigm shift. And we are in we used it as an atomic example this morning of things changing in the Indian market. It's very, very complex. We're seeing increased regulatory frameworks. The profession is under a lot of change, and the market infrastructure is evolving rapidly as every lender here expects to grow and continue to grow. And at the same time, we've got Housing for All and Digital India and all these initiatives that India wants to be on the global stage and wants to catch up to what's been happening in the other markets. There are barriers, and I think I'm sure you all know that in hand with technology has to come data. But without the data, there's only so much you can do. And so it was really understanding how do we capture accurate and quality data, how do we share that and collaborate, and then how does the whole industry move forward. And this was a great example from RICS on a report on the future of valuations, saying the world is about to experience an exponential rate of change through the rise of software and services. And this is not unique to valuations. So artificial intelligence, where computers are generating automated things, is taking over every single industry where it's a repetitive job. Even in law, there's great examples of that. Across every single industry and vertical, automation is happening because it can save time and efficiency. And we're very much looking at a technology revolution. But that doesn't mean that all of us are going to be out of jobs, because it's more that we have to evolve with these changes. And if we think of today as the industrial, if you think back to the Industrial Revolution, we started with horses and carts. We moved to cars, and that was the Industrial Revolution. So we didn't need farriers, but we suddenly needed mechanics. And now we're entering this technology revolution where we're giving a car a brain, if you like, through artificial intelligence. And so we need different levels of skill sets. And so it's about evolution as opposed to revolution, and understanding the role of technology in the shifts. And for us in the valuation industry, having worked in the valuation industry with banks for 16 years, it's about harnessing technology. So actually understanding how do we as valuers and how do we, working with lenders, actually deliver on this increased complexity, this increased need for accuracy, this increased need for speed, and it's only possible by leveraging technology. So artificial intelligence and machine learning, we're using that at Valocity for automated valuation models in the Australasian market, where there is really good data, and as we've seen from this previous speaker, Norm, in the US, the use of platforms is adding efficiencies. So valuers have to do more and more faster. And so actually giving them digital tools and workflows to connect them to the bank to make that more streamlined, so the valuer is not coming back and having to ask questions and get manual things done, adds efficiency. And we're seeing a growth of microservices and APIs. And that is because lenders have got legacy technology, and lenders want to do things faster. They want to integrate data. They want to rely on their valuations. They want to be able to do their portfolios. And so they're using microservices and APIs, and that'll be the future because it allows everybody to connect seamlessly. So the future will be actually changing the way we work as opposed to our work and the answer that we give. We'll start off with smart contracts, moving to looking at properties with virtual reality and artificial reality, so you might not even have to go in there. There's talk of drones actually flying over and not actually needing to even go and see the property. And already today, there's geospatial tools that help you measure the property looking down from map imagery. Data is going to continue to be extremely important, and we're seeing more and more globally open data happening, where governments are recognizing that by actually making data available for free and available digitally, it creates innovation. And we see this in Australia with open data, in the US with open data, and even here in some of the states starting to make their data available and the digitization of that. Internet of Things will provide more data with connectivity and analytical models that we talked about, so automated valuation models. And we run these over portfolios for lenders because they want an always-on dashboard. And so the future may be a hybrid, as Norm touched on, a hybrid where you have the best of data, the best of technology, and the best of the valuer's expertise of knowing what's going on with that local area and understanding the market nuances. So some examples are advanced geospatial tools. So we use a lot of geospatial imagery, particularly in New Zealand, where we have a large agri and we don't necessarily go and inspect properties. Google Maps, different apps. All of you are sitting here with your phone, and so more and more being able to do your job digitally on your phone, adding those efficiencies is going to be game-changing. And so the importance of technology and valuations is very much moving us from manual to digital, as we're seeing across every industry and every vertical. So you can fight it, you can argue against it, but the valuers that are digital versus those that are still doing things manually are going to be the ones that can do things faster, more efficient, capture data, and they're the ones that the lenders are going to be forced to use, because the lenders are being forced to actually show the data and show how they've come to their decisions to lend billions of dollars based on this amount. And so I guess one of the, we're going to touch on lessons learned and working, I guess, in technology and valuations. And one of our biggest lessons has been you can't innovate in isolation. And so with technology, technology only works if you focus on what is the problem we're trying to solve and how do we make people's lives easier. Because in the end, it doesn't come down to data or technology. Everything that's been successful comes down to solving somebody's problem and doing it better and making it easier. And that's been one of the big lessons for us. And I think that's one of the big lessons. If you look at any of the most successful businesses in the world today, the most valuable businesses are no longer Coca-Cola or oil companies. They are all built on technology, on data, and on solving a problem, connecting somebody. So Uber, I've got a car, I need to go somewhere, connecting. Airbnb, I've got a property, I'm not staying there, I need someone to stay, connecting. Airbnb's valuation today is 5 times that of the Hilton, and it doesn't own any hotels. Uber's valuation is bigger than any car company, and it doesn't own any cars. And so the lesson of success and what technology means is actually this evolution that we're seeing is happening. It's not if, it's not maybe, it's happening. And we just have to look at some of these big brands. Apple has created new ecosystems, changing the way we buy music. We don't have to buy the whole album. I only wanted the one song. The App Store, connecting everybody. And so innovation is all about, and technology, whether it's valuations or any sector or vertical, it's about connecting people and solving a problem and making their lives easier. And I guess recognizing that change and today's theme of new paradigms can be uncomfortable. It's much easier to be comfortable and not change what you're doing. But actually, it's happening whether you like it or not. And so it's actually recognizing old ways won't open new doors. And having worked in markets where we've really seen this evolution and transformation of technology and valuations, it's very exciting when all the ecosystem gets to see the value of that. So thank you, and I'll pass on for the panel. And if anyone's got any questions, I'll be outside at the Valocity booth. Thank you.
Thank you, Carmen. While we begin the session, I think I'll just try and see if I can move my chair a bit so I can see everyone. Thank you. Sorry. A little. Sorry. Thank you, Dr. Miller. Thank you, Carmen, for your insightful thoughts on how the valuation profession is going through a sea change. And of course, technology will play a very big role in the way we are going forward. Having said that, we know IBBI has helped the profession in a big way. They have helped us grow faster, brought us all together, helped us guide us in a lot of ways. So maybe to start off the session, maybe I could request Ritesh sir, if you could share a few thoughts on what are the aspirations and how do you think the whole profession will grow forward, sir? Sorry. Could you hear me, sir? Yeah. Can you hear me now? Thank you. So I'll just repeat the question for everyone's benefit. IBBI has helped us grow a lot in this profession. They've worked at a very fast pace, even in the last 2 years that we've seen. And we're very grateful to IBBI and you, sir, for the efforts you've taken to bring all of us together here. So to begin the entire discussion and session, we just request if you could share some of your thoughts on how do you see this profession becoming bigger and what your thoughts on for this profession, sir?
Okay. So, as from IBBI, we see our role in this profession as we call it midwifery role. This profession existed for long. There were valuers in different regimes working for different purposes, for wealth tax, income tax, but there was no single voice, there was no nuclei, there was no boundaries. Anyone could claim that he is a valuer, and the result was that this profession was not getting the due recognition that it deserved. The Company Act 2013 mentioned the term registered valuer, but it was not implemented till government entrusted IBBI with this task. And in I think July 2017, we were made the authority. With the IBBI coming as regulator, this profession got a nuclei, that is IBBI, but we had to define the boundaries. And for that, we conducted an exam which I believe most of you would not have liked. Because to a professional who is doing the same job for years altogether, if we ask them to appear for an examination, I know it is not easily palatable. But I must compliment you all that you have taken this change with open heart and appeared for the exam. As per the data available with me, more than 20,000 people have appeared for the exam, and more than 3,500 persons have already successfully cleared the exam. Right now, more than 2,400 professionals have registered with IBBI. In IBBI, we are using technology to some extent for all these endeavors. We conducted this exam through online module so that you could appear anywhere in the exam at your convenience, because we know you are busy professionals. And all because of this, within a period of 2 years, we have reached a status where the thought of a separate statute has got traction among the policy makers. And right now, discussion is public consultation is ongoing for considering whether what should be the contours of this new legal framework of a separate statute. Again, this public consultation is online through technology, and I request you all from this platform that you must contribute for your own profession, your own cause, the way you have been doing. As far as technology is concerned, I told we are taking help of some technology for conducting your exams, conducting public consultation. Your registration is online. And we regulate one more profession, that is insolvency professionals, and we are already providing for filing of forms, filing of returns online. So we are taking some help of technology as part of our regulatory work. But as such, I admit that we don't have this domain expertise of valuation per se. It's IBBI just as a transit phase. Soon we will be having a separate specialized body for overseeing your valuation work. And apart from any technology, any work you do, always a profession relies on two aspects. One is competence, that we know you are all capable of, because you have passed several competitive exams, be it chartered accountancy, be it engineering, after this valuation exam, which is also not an easy one by any standard. But the second one is character, and character is your choice. You always have to remain ethical, and IBBA as such, we are very particular about ethics, and given the technology, whatever is the challenge, the valuation scenario is changing fast, it will change fast, but you must, there will always remain a application of mind that should be ethical application of mind. Thank you.
Thank you so much, sir, for sharing your thoughts with us. We are ever grateful to IBBI for helping us grow even better forward, ethically, of course, and that's where it's very important for all of us. Right. Okay. So we want to thank IBBI from behalf of all of the panel people here who are sitting here with us. So from the bottom of our heart for all the support you've given to the profession, sir. My next question is to Dr. Miller. Dr. Miller, you've seen how technologies have evolved. You're actually running them right from the beginning, and there's a lot of futuristic work that you're doing. So from a vision and a future perspective for this particular profession, valuations profession, which at some point of time will come down to India as well, would you like to share some thoughts on how is the valuation profession growing globally? What are the new frontiers? Maybe you share some thoughts on that?
Yes, thank you. Carmen touched upon it before, but it's words that I'm sure everybody in this room has heard before: speed and efficiency. Yeah. There's going to be more and more pressure on valuers for speed, efficiency, and accuracy. Right. That's not going to change. And so any way that you can automate your business, even if it's just automating, filling out forms, every way that you can automate it, you have no choice for speed and efficiency. I see the application of technology leapfrogging. And there's so many different things that go through my mind in terms of things impacting the profession, but one of them is machine learning. By the way, artificial intelligence does not exist, even though everybody uses that term. It's really machine learning, and I could talk more about that later if you want me to. But I think what we're going to have is an economy of scale for producing data. And once a firm produces data, they'll be able to sell the data. So as the profession is evolving, I think the first stage is to find firms that will produce better data, sell that data, it's worth paying for it, and that will help the valuers and the rest of the industry evolve. Okay. So it's going to go hand in hand. And I see that happening here very quickly over the next several years, this data production. Right. I think I'll stop there so we give my other panelists a chance to talk, but I'd be happy to go into more detail on machine learning if you want later.
Yeah, perfect. Perfect, Dr. Miller. Carmen, you run a pretty good, successful business in New Zealand. You have set up the whole platform there. From a futuristic outlook point of view, how do you think the world is going to change a bit? And any thoughts on how you think India will take forward to that?
Yes, that's a great question. And I think it's important to recognize, we're in multiple markets and, there's no perfect fit. There's no same size model. And, we know India is very unique. And so, while we use automated valuation models and we're very good at building them in Australasia, it's a very long time before you can do those in India, for example, because you don't have homogeneous properties. Even if you had data, there's no level of homogeneity there. And I guess, in terms of the journey and what we've seen, the efficiency and the value has really come through collaboration and working together. Because, even data on its own has no value unless you do something with it. And there is this very much, my data is my asset, so I'm not going to share it or I'm going to sell it. But if every one of you out there are, there's 2 or 3 or 4 or 5 valuers in your firm and you're only sitting on a portion of the data and so is the guy next to you and the guy next to you, we're never going to innovate and we're never going to have that efficiency if we don't change our thinking to say, well, actually, how do we create shared value exchange for all, and actually a better way of doing this that, we're happy to then share it and create things. So it's really quite complex, and I suppose it's recognizing that it's a combination of technology, data and transparency. And transparency is really important, and I'm sure Norm will agree with me, in some markets where there hasn't been transparency about what you're doing with data and how you're using it. And then really about actually it's innovation and moving quickly, because the world is not waiting. And so I think, for India, you're perfectly placed, and it's a very exciting time for India, and certainly for ourselves in the conversation we are seeing here in this market with lenders and valuers. I think India is ready for the paradigm shift, as the theme says. So I think it's very exciting times.
Thank you, Carmen. Mr. Anand, you're also a provider of technology services for valuations. Would you like to share your thoughts of how you think the market for India will move for the kind of service you're offering?
Absolutely. So, firstly, it's wonderful to be here. And on this occasion, I would like to congratulate and thank IOV and the fellow members of the fraternity. Coming with respect to the market and the way it's moving forward, as a business professional, I'm thoroughly excited to be part of this industry when the whole industry is going through a transformation. The transformation is primarily from the digital delivery and the buzzword called automated valuation models. So most of the valuers currently do valuations on the entire process is kind of more of manual. And how do we automate the entire process to go towards digital? And how do we prepare them for moving towards automated valuation models? So that's where I think the country is heading towards. The whole country is getting ready for the paradigm shift. And the way I look at how the market would shape up is kind of like more the data. You start preparing yourself for having more data and structured data, meaningful data. And eventually, AVMs are going to come into play. And how do you as valuers be part of the industry? How can you be benefited from the data? And how do we involve in the AVM whole process?
Thank you, Mr. Anand. Pankaj, you're also working on the data, on the technology platform piece, right? Also being an end user as well. So from your perspective, looking only from an expectation point of view for how India is likely to evolve. So what's your outlook in terms of how do you think India is going to be taking to this space?
Thank you. In fact, it's in a transition phase, and I began developing AVM 20 years back. This is the first time I developed the pricing model for real estate and got intrigued. And I say that, and I started collecting data because there was no data available. So India has its own challenge, and as Cameron said, we are into transition phase and we are moving into a digital economy. And the way the financialization of the housing market is growing, I'm saying the need by the lenders and the valuer is also increasing to move into the technology platform, because that is where they can bring the standardizations, they can bring the transparency. So I think there's a need, and they can't deny it. The lender can't deny it. And earlier, when the market was too small, the risk in the market was not too much. We have never seen, what is happening right now, the NCLT cases, the overvaluations cases. This is like a beginning to suggest that somewhere we need to bring in better standard in doing the valuations and using the data. And I see that we are in a transition phase, and I also see we have to mentally get prepared in terms of expectations, which you rightly said that. So sometimes I can give you two very simple examples is that we develop a product called Desktop Feasibility Solutions, which helps in assessing the viability of a project and gives the price of the property along with the viability and NP analysis. So we gave it to the lender, and he did use it for some outskirts market. And when he came back and he said that this is all waste, it's useless. And I said that why you're saying this is useless? He says that, it is showing the negative NPVs for that particular market. And then I went back and I see that, so the space in which he was analyzing, there was hardly any markets. The capacity of the market was too small. It was an outskirts property where the development was about to be 50 million square feet. And the annual capacity of the market was not even 2 lakh square feet. Now in that if he's doing, and this is where the situation was that, so question was that he was a credit head for a finance company. And earlier they never bothered about the data and outplay of the data. They will only look at, this is the prevailing price of the property. I do cash flows over 3 years because building takes 3 years. And I'll sell 50 million or 60 million irrespective whatever the size of the market. And they finish it off. That's kind of thing which is there. So I see that there is learning which is required. That data is throwing out. And so it's a transition phase. I see that with time the things is going to be improving. And its time has come for this industry to start adopting the technologies and the data-driven solutions.
Thank you, Pankaj. Vamshi, you've been in the industry for about 2 decades now. You've seen the spectrum from manual valuations to using technology as well. So from a visioning perspective, how are you seeing the entire valuation profession moving for this point of time? Before we hit on the other aspects of various challenges and solutions, but at this point, if you could share some thoughts on how are you looking at the future of technology being used in valuations in India?
Sure. I think I would say before we start, IOV for organizing this fantastic gathering of valuers of whom I'm part of the valuer fraternity. I think 1,200 valuers in the weightlifting auditorium is very apt because we're lifting a lot of weight these days as valuers.
Yeah, well said.
So in terms of adoption of technology for valuations, while we keep saying that tech is changing, data, a lot of issues, a lot of transformation required in the way valuations are done, I think most of the valuers have embraced technology over the years. I mean, we're moving towards automated valuation models, but today everybody uses some bit of automation in the work they do. And historically, over the last 15 years, when we have started doing it, the reasons for embracing technology was more standardization, modularization, ensuring there is error-free valuations, validation of what is being produced. Those were the objectives with which, and of course, speed of delivery. I mean, what was taking 40 days started taking 10 days and now 2 days or even 24 hours for residential valuations to turn around. Also, when we talk about technology, most of the arguments or case points or softwares or solutions are focused towards mortgage valuation space in the residential sector. You don't have too much out there focusing on commercial valuations, right? Historically, in the last decade, we've seen a couple of global tools that exist, but I think they required specialized learning on the part of the valuer as well as the part of the client, right? And in India, we don't have people who embrace solutions like Argus, right? So it's predominantly Excel-based solutions valuers have been providing for whatever they're doing. So talking about what's changing now, I think the world's changing fast. The earlier evaluation required a valuer to kind of give comparables, right? 2 comparables. The loan officer would be very happy going through that report and asking his questions and getting his validations. I guess what's changed now is the amount of data that is available. The banks have revolutionized with the fintech. They have more access, more ways to validate the reports, and they're asking more questions. And the valuers need to look at not samples anymore, but the larger universe of transactions that are happening. And that is where it becomes very, very critical for us to, I think, debate on this panel and going forward to focus on is how do we really provide access to this data? With that, I'll give it back to you.
Yeah, thank you, Vamshi. So that actually takes me now to the next question. I think I'll go in a reverse fashion at this moment because to you again, Vamshi, tracking on the piece on the challenges. So I'll work with the end users piece coming to the data providers to see what is the kind of challenges being faced at every level, to see how can we make this even more faster for everyone to adopt and everybody to adapt to as well. So, so what are the key challenges? You've been using technology for some time now. What are the key challenges that you find when you're using technology? Are they adequate right now, what you have in the market? Do you think, what are the shortfalls? What are the aspects you would like them to cover? Because at the end of the day, when you're using it, like well, everybody else will be using it, what are the aspects you think are the key challenges that need to be addressed from an end user perspective?
So one is like John was pointing out, AVMs, right? It causes more fear in valuers. I think there's a fear of technology replacing valuers. That is one challenge that we face as an industry. A lot of valuers would think, okay, we will get replaced by tools that automatically produce a valuation, then the bank would directly take it from that AVM model. Why would they even need a valuer, right? So of course there is a regulatory requirement and everything around that, but the willingness to pay a fee for satisfying a regulatory requirement is very low, right? Now, the second piece is a lot of tech has always been available and now it's becoming much more organized and there's a lot more innovation in tech that is happening, which is coming into solutions that are sitting, 3 solutions sitting on this panel, right? Cost, right? A valuer makes an X amount of fee. It becomes important to bring this point out because everything is an expense for a valuer and tech is an expense. Now, how does a valuer allocate for a particular license for using a software? A lot of these tools are, while trying to provide, I think a lot of solutions exist in isolation, like Carmen pointed out. It probably requires a larger platform of creating standards on how these solutions can be managed. One biggest issue that a lot of lenders have is the non-standard report formats that get produced and pushed to them, right? I'm sure everybody has their own way of producing a valuation report. So some kind of standardization. I mean, there's a minimum guideline on what should be part of a valuation report, and it's been laid out by various professional bodies, including IOV. But what, I mean, a lender would really want to pick up certain specific cells and do his analysis before he's pushing through. So from that perspective, I mean, that's one area where we see a lot of challenge because everybody produces their own reports. And valuers' capability to handle tech. I think a lot of learning is required on the part of the valuers, including learning how to fly drones because site inspections are going to move towards drones, right? And data handling, data sourcing, data analysis. These are all things that I don't think traditionally valuers are used to handling. I mean, they do analyze data, but not using tech solutions. So learning that technology, upskilling the valuers is going to be the biggest challenge.
Thank you, Vamshi. Pankaj, you worked at both ends, right? You'd like to share some thoughts on the challenges you face both from the user end and as well as from creating the platform that you were working on?
You know, the biggest issue in India is that the data is not well collected. So even though the lenders have all the valuations, there's no repository. It's like typical specific reports, so they can't cull it out. Even though when they fill in these informations, I've seen, because we are developing National Housing Bank, Recetex, to have access to Bank HFC's data also. You know, there is no specific form through which the data is filled in. So the property address not well filled up, underreported or overreported transaction prices in the registration data, and each state has its own different type of architect of the data. So that data and its architect and the way it is available is the biggest challenge. And in India, frankly speaking, we don't have a geospatial data available, so so the property address is just written, and that's also not written uniformly, and that's the biggest challenge. So in adaptations to new technologies and implementing any kind of mapping solutions, that becomes very, very huge because your prediction is as good as what data you are seeding in. And if the seeding data is not ready and quality, that's where the problem comes is. And that's where I say that, like, I spent some time with Miller and probably we started looking back in the paucities of the data. Is there different other models like which we are trying, like, which is a spatial urban setting model where we are scrapping and analyzing the satellite imageries and analyzing the built form and its own relationships and with correlations with the property valuations. And why we are doing it, because there is one set of answers which is coming from the data which we have available, but then there has to be another model which validates that the results of the AVM which you got is correlated from some other factor. So India has its own challenge, which I say that. So any kind of adaptations of the technologies, we require the data, and the data in the current form is not really suitable the way it happened in the developed world, where each property has its own unique ID, and with the unique ID, you have most things well connected. So running and any kind of model is much easier. Here is like that. I'll give an example of, like, someone will write a property address, which may turn out to be a Bank HFC's branch address. Okay, and then you are running, then there are issues which translate into, and so I think the data architecture has to be defined. There has to be one standardized method, and in which I believe the IOV can play a very big role, where among all the valuer, they can introduce a form which is intelligent form, which actually helps in registering the property attributes well, which can probably later on, since the Cameron also mentioned that we need to be collaborating when it comes to the data, because right now it is all in the silos, which has to be brought in together. So for that also, right from beginning, we need to have the architecture data well defined, and then the things will really move forward. Having said that, India has challenge, and that also opens the opportunities that we can do quite a lot, because these challenges may throw a light of new ways of trying to work out new methods of valuations, which may not be the one so far existed. And I don't know, I think Miller can throw some more light onto it.
Thank you, Pankaj. Carmen, you want to take this question forward? You've been in India for some time now. What's the challenges you're facing as a service provider? Because everybody in the world will be looking at what you'll be providing here as well, right?
Thank you, no pressure. Yes, so India is not without its challenges, and that's where I guess, yes, we have been in this market for a while, understanding. And so I guess we're bringing our experience of having done this in New Zealand. So when I launched Valocity helps digitize the valuation process from the bank to the valuer. So it's connecting them so that they can digitally communicate, they can actually share information and share the property ordering form, share back the valuation digitally. So the bank's very happy because they get all this data and it's accurate. The valuer is very happy because he gets all this efficiency and he gets to use this secure platform that he can't build himself, and that makes the bank happy. But when I started the business, I was going to banks, want to use my valuers, and they were going, got any panel? And the valuers were going, and I was going to valuers, want to be on Valocity? And they were going, got any banks? So, not a challenge that you would think is simple to solve. But the answer is, how do you create value for all of the parties so that they all want to participate? And so it is about not just technology, as he said, it's about creating human-centered design technology so it's intuitive and people can use it and it does make their work easier. And it's about solving the problem uniquely, creating a unique solution for each party. So we have My Valocity, which is when the consumer starts the valuation order. We have Valocity, which is when the banks does it. And we have Val Smart, which is the valuer's own version of Valocity. And I guess that is the secret and kind of the magic sauce, if you like. It's actually understanding that for technology to work, we have to create value for all of the parties to participate. And then you have standardization, you have data flow, you have efficiency for all. And, you know, I guess our most loved customers in other markets are the valuers love it. And so for us in this market, it's been very much recognizing what do we need to do uniquely for India around addressing, around data, but also around collaboration and actually creating value for all. And that is kind of the magic. It's not just about the technology. It's really about that human design thinking and collaboration of an ecosystem, because individually we just won't get there.
Thank you, Carmen. Dr. Miller, you've heard the challenges that India is facing, and did the US market go through the same thing? I mean, you've seen it grow.
Yes, the US market went through the same thing, and what I'm hearing from this panel and others is that the valuation industry here is very fragmented. And so the most important thing that happens early on, and it happened in the US 20 years ago, is you choose who you have a drink with. And you drink with your competitors, and you drink with people that you respect, and you decide who you want to affiliate with. And you need affiliates in different markets so that you can serve the bigger client that says, I want work in Mumbai and Delhi and other cities. So you need those affiliates. It doesn't mean you share profits, but you have a respectful, trustful relationship with affiliates. So who you have a drink with, who you network with, that seems to be an important step. There's lots of models for getting data together, but one of the other things that we've learned is that it's not efficient for everybody in this group to be collecting the same data. It's more efficient for a few vendors to be collecting it and sharing it, and there's an economy of scale. There's different models for that, machine learning, but another model that works is crowdsourcing. And so we share archived appraisals. And we could have somebody make a business out of, you give us one set of data, one appraisal, say, and we'll give you back 3, or pieces of 3. And we crowdsource it, and we use that to build up our database. There's a firm in the United States called Comstack. They're doing this with lease data. Lease data is the hardest data to get in the commercial real estate industry. So they started crowdsourcing, and everybody said, I'll be darned, it's working. It went to work 20 years ago because nobody would have shared. The only reason they're sharing now is because they've seen it forced upon them, and now they realize they don't have any choice. Right. So they're now sharing that data. They're sharing one lease, getting back 3. So there's different models, and then there's machine learning, and I think there's an economy of scale there. Not everybody should be doing it, but just to summarize again, the most important thing, choose who you have a drink with and network with, and find affiliations. And the bigger they get, the better. I mean, nationwide if possible. Second step, archive everything you possibly can, because you can share it down the road, and try to put it in formats that are easy to retrieve and sort and use. And firms like yours probably can help in that. And then third, look for firms that are crowdsourcing and machine learning to generate data. And at some point in time, somebody will emerge who will be selling it, and it'll be efficient enough. And ideally, we would have, in a country like this, 3 to 5 major vendors, not more than that, with data. Because again, there's an economy of scale. And it sounds to me like we'll move in that direction, but it's going to take a while.
Thank you, Dr. Miller. Ritesh, sir, any thoughts you'd like to share on any difficulties or challenges from a regulatory perspective that you would want, like any ethical training or any aspects where you think technology can help, sir?
The biggest hurdle in adoption of technology is mindset.
Right.
And we have to admit that technology is changing not just our profession, it's changing whole the society. With so much of data available, so much of computing power available, things are changing too fast. maybe too fast for comfort for many of us. Every smartphone that we carry has more computing power than the computers that were used for sending men to moon. So, and the only solution lies is to adapt. We have to assume ourselves in a situation where we are standing on ground and technology is pouring in from all sides, like feeling water is pouring in. And if we don't adapt, don't try to float over it, we are going to drown in the water. So, but if on the other hand, if we learn to adapt, we learn to float, we can scale new heights with this help of technology. We have to look for other professions like architects, like doctors, sports coaches. They have done wonders with the technology, and for valuers, the technology can be very, very useful, but on the other, same side, valuers themselves have to go up in the value chain. Otherwise, the task they were doing some 20 years back, they will be simply taken by machines. Machines will take over their job. They have to learn, they have to adapt. Those who decide to remain firm on the ground, fixed on the ground, don't adapt, their jobs can simply be taken away by machines. That challenge I see, but I think competition will take care, and this profession will thrive. That is my take.
Perfect, sir. Thank you so much. I mean, I'm sure we'll all keep an eye out to make sure that we stand up quickly for this. Dr. Miller, if I may just trouble you again, a little bit of thoughts on machine learning. If you could share some thoughts on how is machine learning evolving, because that could possibly be one of the solutions for India. India might want to leapfrog to that at some point of time.
Machine learning definitely can produce a lot of data. And there's a lot of different areas that we use it in real estate. One of the things that we learned early on is that you can't just dump a whole bunch of data into a machine and expect anything useful to come out. The easiest kind of machine learning would be things like text data mining. You know, go in and find all the words that tell you the kind of condition the property's in. That's actually pretty easy, and there's software that will let you do that. The hardest are images. So as an example, we wanted to know the quality of roofs of housing. We put 1 million pictures of roofs into the computer, and we said, sort it out and do categories and give us quality indexes. It totally failed. Then we brought in some experts, and we said, let these 4 or 5 experts rate a couple hundred roofs and tell us the quality, and take those images, and then use that to start our system. And then our system did great, and it learned, and it learned, and it learned, and it got better. And all of a sudden now we can take images of roofs and tell you the quality. So what we've learned is not just computers, it's experts working with computers that develop useful information. And it's the same thing with valuation models as well. We've tried and avoided models like neural networks. I can come up with a value to predict a model that will predict price pretty well using a neural network. But I don't know if it's going to work 2 years from now or 5 years from now. And I can't explain how I got the value. I stay away from those models completely because I need to understand the logic. I need to know the cause and effect. I need to know why the value is higher and lower, and I need to be able to explain it to somebody. So you can go too far with machine learning, statistical models. We use models that you look back and you say it doesn't make sense. And in your gut, if it doesn't make sense, don't use it.
Thank you, Dr. Miller. Let's pump up the volume. Carmen, any support you need from anyone within the industry, within the profession, from our government, would you like to share some thoughts on that to help you develop your technologies going forward?
Thank you. I think it's really about embracing opportunity and looking for not all the reasons why not to do something, but what are the reasons to do it. And it's just like that with anything. I mean, if you said to me a few years ago I would be jumping in a stranger's car and getting a ride or staying at some random person's house that I don't know, I'd be like, you're joking, never going to happen. But I use Uber everywhere I go. It's much easier than having to wait for a taxi. I use Airbnb. And so it's recognizing that, change is for the good. And I think, I guess to the example when I talked about us launching in New Zealand and the challenges, today we have the most valuers, the most brokers, the most lenders, and the most consumers all connected to our platform. But it was about creating value. So I think it's recognizing, embracing change, and recognizing actually if there's no things that it's difficult to use, or it's additional cost, or it's actually only going to help you, that being on board rather than being left behind. And it is a mindset. So I suppose it is really going to be about working together, and also the use of standardization, or regulators actually bringing standardization, will only make it better for everybody. Because the reason why banks can't use, for example, machine learning like Norm just talked about, is they have to show the regulator how did they come up with that decision. They have to do what we call due diligence. So whether we're using an automated valuation model or whether they're using a full valuation, they need due diligence to say, I lent billions of dollars and this is how and why. It needs to be traceable. And so when you think about full valuations and what you do today, and I guess the journey that Valocity is taking you on, it's about capturing the evidence, the data and the evidence of how you got to that answer digitally in a platform, so that you do have the backup to say, well, actually, on that day, this is how I came up with the valuation. And, moving to global standards of including 2 or 3 comparable sales to go, that was the evidence on the day. So, Mr. Lender, you said yes based on my valuation. And, so there was talk earlier today about how do we educate the lenders, and that's very much about working together to go, well, actually, if we can bring standardization, when we say this, this is what it means. When we give this answer, this is what it means. And this is the evidence that I, as the valuer, used to come up with that. And here you go, Mr. Bank, you now have it in the platform digitally recorded. So you also need to be responsible for the decisions you're making. And that's the journey that we've seen, that accountability that, in the markets, even here, the banks go, okay, is Valocity going to tell me that this valuation was right or wrong? And the answer is no. We're just going to connect you with the valuer, but we're going to bring standardization and make it easier for the valuer to capture data, and make it easier for the bank to actually assess that information, and then make an informed decision. So it's really, I think, the market is ready for standardization and everybody actually moving to global standards, and that's only going to make it better for everybody, I think.
Thank you, Carmen. Pankaj, you want to share some thoughts on what support you would need in the market from the perspective of a technology solution provider? Do you think it's giving you everything you want, or is there something you would need from the market?
My own sense is that the use of the data has to be more, and my own past experience being, although I'm sitting over here, but I would like to say that in past I've seen that the opinions were masqueraded at the valuations because there was no standardizations. People will put their assumptions for the premiums and the discounts based on what valuation they wanted to come up. And I see that the land economy is very scientific subject. There's a space interactability and its own productivity, which is well defined to the land. So important is to use the data and bring in the standardizations, bring in the science through which the real estate prices behave within the cities. So the kind of a misuse which takes place when it comes to the valuations can always be, curtailed in this particular sector. And that is something which, frankly speaking, not only as a valuer and a stakeholder we are looking at, but as a country and the economy is a need of the hour, because if overvaluations once really put the stress to the banking sector, so eventually to the economy. So from that particular angle, I see that the adaptations of the technology is the first and foremost things, and the usage of the data. So far, we have done the things, with the gut feel factors or with the limited informations. But having said that, going forward, it is going to be really very difficult. So my own sense is, let's be collaborative.
Mr. Anand, any thoughts? You're also producing a software that's for use of the valuers, right? What are the support, do you think, whatever you're getting in terms, what are the support that you would require from the market, from various players, whether they're government, whether they are other technology providers? Any support system or any support points that you would require that would help the technology providers benefit and be able to produce the products for the market faster, more efficiently?
So, when it came to the challenges or the support that would reach out to the market is adaptability towards technology. Primarily, valuers have been in the practice of using manual processes. So, opening up their minds to adopting technology, of course, with the support of the technologies, helping them to adopt. So, my appeal to them would be to start collecting data, ensuring the data which is collected is a meaningful data, and it is as per the standards and following the compliances. So as the data is you start collecting the data and storing the data, eventually as you could form some consortiums of what other speakers are also talking about, so which will eventually take you to the future where AVMs will start prevailing. So, my appeal to you would be to start collecting data and be relevant, meaning be prepared for the AVM periods ahead. Yeah.
Thank you, Vijay.
Thank you.
Vamshi, from an end user, you're representing everyone sitting here. We're going to be using the software and technology platforms that are going to be created. What is your ask to them? What would you want them to produce for you so we can make life easier for all the valuers who will be hitting the road?
Yeah, I think two core questions or core points when it comes to valuations. I think the question when I started off doing valuations was why do we need valuations, right? That's the most fundamental question, right? The regulator requires a valuation because there's somebody who is saying everything is all right, and the person who's putting in the money is relying on the valuer saying, okay, this guy has given me an opinion, I should rely on it. Now, the core point is that a valuer is not just a regulatory necessity, but an expert who is providing an opinion on the value of a certain property or a certain asset on which decision making happens. Like Mr. Sahu said this morning, right, that it is, we are focusing on public activities, and this is something public rely on to make decisions, right? So that's very, very important that valuers realize that technology is a tool, and all solution providers needs to understand one thing is that it's valuers who should be able to use this technology, and it should be as seamlessly integrated with the way how valuations are done than trying to impose and create new systems around it. And two, I think valuers need to stop probably, my request from a lot of valuers and from myself as well is not to see it as a necessary evil which is required from a regulatory perspective, but to really add value to the process by providing opinions. Now we have access to more data, we have access to more tools, more technology. We use this to provide well-considered opinions to clients who then perceive the value of valuers and the profession at large. And that's, I presume, what the regulator as well is looking forward to.
Thank you, Vamshi. With this, we'd like to throw the floor open for questions. So any questions, we'll be very happy to take them. But given the paucity of time, we'd like to take 3. And the rest, I would request if everyone can catch up with the panelists at the tea break, and probably that we can take it forward.
Hello. See, the topic I think was transforming valuations through technology. The whole discussion has been going on only on the real estate. That's a good thing, but there are other areas also which will need technology. Now, there is a challenge when you talk about technology in valuation, especially real estate. Everybody knows in India we have deals in black and white. So even if you have 100% data, that will be only on the white component. But you can definitely see, you being very high technocrat people, you can definitely put an input for the black component also. Now, now will the regulators allow that black component to be part of AVMs?
So could you pass on the mic to the other gentleman also? We'll take the questions together, I think that'll be faster.
All speakers have spoken about land and buildings and regarding civil, how to use these new technology tools. I would like to know whether these tools, artificial intelligence, industrial, Internet of Things, 3D mapping, additional manufacturing, digital technology, can it be used in valuation of the plant and machineries?
So let
Thank
me
you for
just,
your question.
yeah. So maybe I'll just repeat the question what Sir's asked. Importantly is, can we use various technologies that are existing right now, like the digital technologies, Internet of Things, all the other aspects wherever technology is being used, whether it can be used for valuation of plant and machinery. Is that a question?
Industrial, Internet of Things are there, okay, artificial intelligence and additive manufacturing, and another is Industry 4. Now, the present we are passing through the Industry 4.0.
Correct.
And these technologies, can it be used
Yes.
in evaluation of the plant and machineries?
Mr. Gulati, you understood the question, right?
Yeah, yeah. For
Sir,
plant, valuation
take
of
your
plant and machinery,
Thank
right?
you.
If, can we use technology for valuation of plant and machinery,
Because we
right?
are talking only about civil.
Civil, understood. So let me add to that question on behalf of the audience. I'll probably throw in and then probably Vamshi. You want to take them after that? Okay. See, what happens is when you're using technology, the question is how are you using comparables even for plant and machinery? There is obviously the question of using technology just by seeing a depreciation method. But the question what comes out also is when you're doing a market value is whether the same kind of utility is being currently provided by other kinds of plant and machinery performing the same function. So the internet and the digital technologies and the various technologies that is being talked about here, it gives you access to all comparable platforms. We unfortunately don't have a person who's providing that kind of service in the market. That's not on this platform yet, on this panel. But what also happens is you can actually do a comparable of the utilities, and the utility is being provided by a certain plant and machinery, and you can get comparables what pricing is being offered in the market as well. There are also other technologies which are being integrated with systems to understand what is the kind of obsolescence that the entire particular plant and machinery has also gone through without going through it in detail. But apart from that, there is ways that technology can be used and adapted to understand and complete the processes that we do as valuers. The processes we follow is something that do not change. They can become faster with the aid of technology, which I think there are enough solutions that are coming up in the market also, and it's an evolving field. Vamshi, you want to add to that? Take a mic, please, if that's okay.
What I feel, sir, these lenders, banks, when they are giving money, loan to the industrialists,
Okay.
I think they are getting the valuation, wrong valuation.
Okay.
That's why in nowadays we are seeing a lot of NPAs from the industries. And our economy is coming down because of that reason. I think these tools, if it is implemented and proper valuation is given to the lenders, I think we can do a lot of justice to the nation.
I completely agree. So I think that is what Ritesh sir was also saying, that we as valuers need to use technology to be able to give the right numbers in an ethical way. That's what sir was also suggesting. That is how we need to go about it.
May I, sir? Most of the banks or the financial institutions give a format to be filled while giving a valuation report. And we are talking about an additional technology that is to go. I think the training should go to the bankers than the valuers.
Yes. My name is.
Yeah, well said, sir. I think the banks and financial institutions are cognizant of that fact as well, and in some interactions, they've been wanting to streamline the formats. But fundamentally, what I understand, and based on the tech tools we have developed in-house, the back end can take care of whatever information fields need to be captured and what pushes out to each of the lenders as the output reports in their formats. You will, as a valuer, be doing one process. The output is generated by the technology solution in the manner in which the bank needs it. So you don't have to create it in different formats. So that's where technology comes in and helps us as valuers, right? And also, sir, on the plant and machinery, just taking a step back, I said in the beginning that most of the solutions available are focused towards mortgage properties, which is residential mortgage properties. That said, there are a lot of parts of the process automation that can be adopted by all other valuation professionals for all other asset classes as well. Why just plant and machinery?
Question is.
Hello. Excuse me.
Hello. My name is.
Myself, R.K. Datta from Lucknow. Actually, I want to know that from where the data can be collected, because I am finding that all the banks are now prescribing that we should do valuation on international standard. International valuation standard. But what happened, whenever we want to search any data, what we are getting, sometimes I got that the land has been sold for this much amount. What is the area of the land? Where only the address, sometimes address is given, sometimes address is not properly given. So data is very difficult to procure. That's why, unless otherwise, if we get such a type of data from some platform, from any of the source, then it will be very helpful for us. Otherwise, what you are telling, the data you should collect the data. From where we will collect the data? It is a very difficult, because now the valuation has to be given within 2 days, 3 days maximum, not more than that. They say the same day you should give, because nowadays the bank prescribed that within a period of 10 days they will give the loan. So, and as such, in that 2 to 3 days has been taken by the legal people, and then they only remaining people, when they want to give only 1 or 2 days to the valuer. So during that period, comparing that, now we have to, first if we get some data, then we have to compare it. What is, in which road it is situated, what is the width of the road, what is its location proper, then only we can compare. So how we can do it?
Completely agree with you, sir. Completely agree with you.
Good afternoon,
it's
sir.
A very, very valid point.
Hello.
If I may add to that, that is exactly what the industry needs right now. And the data points that you're talking about is sitting all amongst us. We all have our own database. I think it will be a good suggestion for IOV probably to put a standardized template wherein they could start putting the data together for the country together.
To
and
strengthen.
Pitch in.
I
think everybody can use that
Hello.
data. It will be sanitized. I think that's probably one suggestion.
Good afternoon.
I would like to know
Good afternoon. Can I
how this focus can be utilized in valuation of the plant and machineries.
I beg your pardon, could you repeat?
How focus the gentleman who is sitting in the extreme.
Yeah, Vamshi.
You have told us the focus it can be utilized to evaluate the plant and machineries.
Saying some parts of it can be used, like for example, inspection tools. If there are drone-based inspection tools, you could try and use it for plant and machinery inspections, or streaming inspections, which is what is a new thing that is coming up, where you don't really sit live, go live to a site.
One thing, sir. When a valuer is going to see the plant and machinery valuation, he will not go to the part of spare valuation. He will go to the plant equipment.
Sir, I can answer your questions. Can we take this offline in the interest of time?
Good. And one more thing, sir. I would like to know, when valuation is being done, that they don't provide the, what you call, exact tax invoice. That valuation has to be done on the tax invoice. Not offer getting from the supplier, it can be exaggerated.
So we'll take it offline. I'll come to you after this.
Good afternoon. Good afternoon. I've been waiting for my question, please.
Please go ahead. Please.
Good afternoon.
Yes.
Yeah, I'm here on the right.
Yeah.
On the left. Yeah. My question is that, good afternoon, panel members. I think the House has been keenly waiting answer to the first question that the gentleman put up about comparables and about black money component that goes into valuations. I think the House is keenly looking forward to that, and I would be happy if panel members can come to that.
Because the reliability of these data will be solely depending upon the Indian economy. In Indian economy, we all know as well that the ratio is not equal. With whatever data you get will definitely not be realistic. That is the main question.
Hello.
Hello, my
Who is
question
it
is.
speaking?
Madam,
Hello.
At least, you allow me
Hello,
to speak.
this is the Bhimrao speaking from backside.
Yeah.
I am DK Jain from Indore.
Sorry, I'm getting light in my
See, can we take one by one, please?
Yeah.
Just
And
one by
all
one.
the
please.
personal questions that you have, I mean, single question, it can always be answered when we have the tea break. That is a one-to-one. All the panel members and all the speakers will be available. Yes, sir, your question.
Yeah, my name is Mohit Mehta. I want to emphasize on the point given by the chairman of the session, Sachin sir. Why don't we create a valuation report format like an income tax return, which can be uploaded online rather than offline, so that data can be created and can be used by, like income tax department use for various analysis. Right now, the offline system create a lot of problems, and bankers, if they don't like report, they put it in a dustbin and manipulate with the reports. So rather than that, if reports are submitted in an Excel format online, and that can be accessed by anyone with a user ID and password.
Perfect.
Yeah.
Mohit, that is actually the next step, which is, I believe, at
Thank
some
you, sir.
point of
That
time.
is the last question of the session. Yes, sir, please
Madam,
carry on.
last question from Hyderabad.
Just a moment. Can I finish this answer?
Just a last question, sir. Last
Sir,
question.
this question can be answered when you have the tea break. This panelist and the speakers will be available with you. So you can have one-to-one. एक दूसरे के साथ आमने सामने आप बात कर सकते
लेकिन
हैं.
ये लास्ट क्वेश्चन है मैडम. Give me chance.
I think last question we've already taken.
No, only last question. Please, last from Hyderabad. So see, sir, see, this is my suggestion.
This is the absolute last question. After that, will be available right after this downstairs. This is the last one. I'll answer the two questions.
Ye question.
One question is there.
So these questions are my suggestion towards the valuation and for the software developers. The land rates will be taken like this. What is the government? The guideline rate will be there. It will be 2 folds or 3 folds according to the lines and according to the areas of the cities. So that is going to be stand data. Either maybe one double or triple or fourth or 4 times will be depends upon the areas is to be taken into consideration, and it will be fixed the rates for the standard data. Next, second coming to the buildings, because of land and building value. The land and building where generally the buildings will be there. The core building will be there, like the column, beam, slabs, and the brickworks and plastering will be for any building. It is common. Next,
Sir, is that a question? I think this is quite long.
This question only, madam, for people to understand.
Can we come directly to the question?
This is only question because they not understand because it's question only. So the next the item finishing items is taken into consideration.
I would
and
request
the data will
everyone
be
to
fixed.
please be seated. The break is not yet been conveyed to you.
The core will be one data, standard data, because every building will have the same data. Next, the second, the data will be depends upon the items which is used in the finishing items will be given the data. 30%, 20%, 50% according to the finishings. Thank you very much.
Thank you very much. So 2 questions, we'll answer that. That will break for tea.
Another my question is there, sir.
Just
Shall
one
I come
moment, sir. Just one
face to
moment.
face?
Sir, we have taken
Sir,
the last
we
question.
won't be able to answer any questions. Just allow us to finish this. We're downstairs. We're not running anywhere. We're right here. Giving the answer
Yes,
right
it is
now.
only the questions
To
and
answer
no
Mohit's
answer.
question, just a moment. To answer Mohit's question, the database that we're talking about, it's going to be an online one. It's an activity. India is still in its growing phase. The technology service providers that we have here and others in the country are putting this thing together. This will link up with the bank's platforms and the regulator IBBI as well at some point of time. You will have access to real-time data. Answering, and this is in line with the other question also, in which we are looking at what kind of data that you will require in different rural areas as well. Whatever data everyone goes and visits some areas and puts it up, there will be a sanity check as well, because anybody who provides up that data for Reliance will have to make sure that the data is reliable. They will send out their own sources into the market to cross-check and put up this information. So at some point of time, this entire system will get rationalized. It will get sanitized. Everybody will have access to good quality data. And this will also help various government departments for stamp duty collections and all those other aspects to ensure that the entire country's economy becomes clear, stronger, and becomes bigger. And with that, we'd like to thank everyone for your patience. We are available for further questions with the entire audience. I'd like to thank all of you for taking time out and sharing your valuable thoughts with all of us.
We'd like to go for the felicitation right now. Thank you, gentlemen. Please understand one thing. When there's a question and answer round, there should be one question from your end, and there would be gentlemen who will be available on the dais for answering also as well. You have to allow them to answer your question as well. And the suggestions, and you have a lot of ideas and concept, so it will always be advisable to, when you go out, have the break, for the tea break. All the gentlemen will be available, the ladies will be available. You can always have a one-to-one conversation and put forward your ideas and concept. Thank you so much. And before that, we'd like to felicitate our speakers, of course, and of course the chairman of the session. I would like to invite Mr. Goel to be on the stage to felicitate our chairman of the session, CEO and founder Valocity, Ms. Carmen, please. I think Mr. Goel is not available right at this moment. Can I request Dr. Norm Miller to do the honor? Carmen Valeric is a global entrepreneur who's founded two multi-million-dollar business around technology and data. Her Valocity business is transforming the valuation process globally through its cloud-based modular platform, which connects the entire as a panelist, sir. Our next panel member is Mr. Vamshi, and he is the Executive Director of CBRE and Head of Valuation and Advisory Services Practice in India and Southeast Asia. Vamshi's expertise includes investment-related due diligence, mortgage, collateral appraisals, financial reporting, investors' risk monitoring, etc. for being a wonderful audience, and I'm sure our next session, which is starting in 15 minutes from now, will be another amazing interactive session. But please keep in mind the question and answer session as well. Thank you very much, and after the tea, refresh yourself and see you in some time. Thank you, and enjoy your tea.